Hello again, and welcome to the Olim Trade channel, where you'll always find something that improves your trading. Don't forget to subscribe and press the like button. My name is Alex, and in this video, we'll examine the top 5 common trading mistakes that most traders make but can avoid. As traders, it is critical that we not only strive to avoid common trading mistakes, but remedy them as soon as possible. It is often said that every trader has to find their own path to financial success, and there is no secret that we all make mistakes. Avoiding them completely just isn't possible. That's why, before you begin trading, you have to accept that losses are inevitable. This will help you to overcome any negative feelings that accompany a loss. We all know that trading is not an easy task, and there is no one-size-fits-for-all strategy. Most traders trade according to indicators that form the basis of their strategy, while others choose to trade on events as they unfold in the news. Remember that each trader is responsible for finding their own route to financial success. Whether we are talking about which assets to trade on, which indicators to pay attention to, or the trading strategies to adopt, each trader will come up with a different mix of these. The following are some classical mistakes that you should avoid making as a trader. Being unprepared. Luck is what happens when preparation meets opportunity, and the lack of preparation is the number one reason why most traders fail. I think we can all agree that trading is one of the most difficult professions in the world today. Even with appropriate preparation, it can be difficult to keep a competitive advantage in the market. It is essential to keep up with all the latest and high-impact economic news, even if you are a purely technical trader and do not trade based on the news. If you're a day trader, keep in mind before entering the market that you'll be vying for a piece of that action alongside market veterans who are experienced and well prepared for the market. Don't forget that preparation often meets good luck. Trading emotionally. Let's face the fact, our emotions sometimes get the best part of us. However, in trading, the market is purely a battle between bulls and bears. When the bears outnumber the bulls, prices go down. When the bulls become stronger than the bears, prices shoot up. Many traders often make the mistake of trading emotionally, which is a constant push and pull between greed and fear that arises from our heart and mind. Don't let your emotions rule your mind. Strike a balance by learning how to spot the right moment to exit a position. Research has proven that strategies based on higher time frames tend to be of higher quality and are considered less risky. You should always keep in mind that it's not how often you trade that matters, but how well you trade. Ignoring technical indicators. One of the biggest mistakes that most traders make in trading is ignoring indicators. Sometimes, the thrill of closing a successful trade can cause even the most seasoned traders to act hastily. Take profits and exit a trade if the trend indicators suggest that a trend is close to its peak. Needless to say, do not clutter your chart with tons of indicators in an attempt to generate near-perfect signals. If you want to succeed in limiting your losses, stick to your plan no matter what the trend indicators show. Not using a trading journal. If you are not keeping a trading log, you are doomed to fail as a trader. Just like your bank statement, use that log to track your wins and losses in order to learn from your mistakes. You can discover what works and what doesn't work by keeping track of all your trades in a given period. Keeping a trading journal is extremely beneficial for improving your future trades and becoming a self-aware trader. Not doing your own research. In trading, you come across a lot of individuals with all kinds of trading ideas, some of which may seem like the quickest route to paradise. Don't fall for every tweet or opinion you come across. A lot of people have learned this the hard way through pumps and dumps. Understanding strong market correlation between assets is a skill I recommend you to learn. Don't trust a trading robot or pay for a piece of expert advice just because you don't want to rely on yourself. By doing your own research, you will gain a better understanding of the market and make a more informed trading decisions, which will prevent you from making avoidable mistakes. Don't forget that mistakes in the world of trading are very natural and should not be feared. The most important thing for you as a trader is to learn and make profit at the end of the day. That is why it is always safer to equip yourself with the right know-how and practice on a demo account to backtest and detect and avoid potential mistakes before they arise. Learn, trade, and become a force to be reckoned with on the market with Olimtrade. If you like this video, leave us a comment down below and tell us what topic you would like to see next. Press the like button and don't forget to subscribe. See you soon. Bye.